Hi everyone, weekly market outlook here at fxstrategies.asia today on the 6th of July, Saturday, the day before the election in France. Well, landslide majority not happening for the far right in France. Is that going to change after the Sunday votes? People talking to me state that, well, the situation could get extremely tense. Comparing this back to the UK, the landslide win. Labour, Keir Starmer won and is going to lead the new government moving forward. Whether this is going to give financial markets more stability might be the question. But yeah, let's focus on the pound and on the financial markets looking ahead and looking for potential clues towards market motivation. In this case, what we should mention that's clearly visible here, the pound had geared up strong momentum and is already kind of really trading at the resistance, the important resistance area here, or the 128.50 area in reach. Stability, clear stability, obviously helping the currency to gear up some sort of momentum, and the US dollar's weakness might be also something which we'll look into a bit later. So the pound's strong momentum to higher levels. Next line in the sand, next resistance area should be at least here, the 128.60 zone, all the way to the upside here. Not far off, but quite close, as the weakness of the US dollar, of the greenback, supporting the pound gearing up momentum. The euro, the common currency, again, and now back to the election in France, might also stabilize somehow further with the weakness of the US dollar. The common currency is on track to rise somehow to next levels, 108.60 something, then the next level, 109 area, those two zones which could be retested as well. Dollar weakness currently helping the environment there, and as we said, the majority in France, the right or far right-wing majority, was not happening. And currently looks like, when looking at the charting picture alone, that upside momentum seemed to be the regular case here. And the charting pattern has changed since now back from the 105, 106 area. Basically, the market seems to be on track within that zigzag pattern to rise somehow further. Upside momentum, upside motivation, at least a pretty likelihood we can see here in markets. That aside, we had an election as well in Iran. So the new president, whether he is going to change the situation, looking pretty much moderate without a big beard, and apart from that as well, he was a medical doctor ages ago. The situation likely not going to give us strong differences, but potential momentum, potential slight opening momentum might be at least the outcome we might see here at some point. So back to the election, back to the news events, and now towards financial markets. We have real news from New Zealand this week. It's a bit of a short week in regards to interest rate, news decisions and whatsoever. The only big story is coming from the Royal Bank of New Zealand. No change being expected. The central bank, RBNZ, expected to leave rates unchanged, 5.5%. There's not going to be any potential adjustment. What if they will reduce rates? Well, then obviously the Kiwi, as it's called, might weaken. Somehow we shall as well look at the charts here. Currently the market, though, looking quite positive. Here, the resistance area, this red line, kind of about to be broken. And focusing up on the monthly chart, we can see the market might indeed break to higher levels, as the recent falling trend line is being threatened somehow. Whether this or a potential rising trend line makes somehow sense as well can be debated. But if that swampy area is being left to higher price levels, This is the zone we talk about. We could see another breakout in the making. That's upside motivation here and downside motivation back at that area to lower levels could be the flip side there if the market is going to break away to the up or to the downside. Further volatility might happen. Upside momentum looks more feasible, at least currently. Why? If rates remain similar, there's no weaker interest rate. If an interest rate remains stable, this could give for the New Zealand dollar at least some upside momentum, causing the New Zealand dollar to gear up further strength as the market currently looks like. Further down the road, we got inflation data from the US, and that's now the other currency, the greenback, the US dollar we have here. Consumer price index expected at 3.1%. So a slight decrease in consumer prices, slight decrease might help as well the weakness to continue. And to gear up momentum, to gear up insights, we shall look at the US dollar. The dollar index, obviously kind of everything against the dollar, everything against the greenback here has weakened somehow sharper last week as the euro gear up momentum, the pound as well, among other currencies. We could see that now the weakness is ongoing. A potential trend line, a rising trend line here last week was, or we have to say this week, still this trend line was broken and the market seemed kind of to be ready towards lower price levels. A clear upside here above the high point might be seen. However, we are quite far away here. That's the weekly chart, right? 1, 2, 3, say 4 or whatsoever, 4 weeks roughly of slight price momentum to higher levels has been rejected by the price moving down. And now that might also help here the recent and the upcoming information. What if the consumer price index really stabilizes at that slightly lower level, 3.1%, we could see that the market's momentum here is going to remain at those lower levels. Consumer prices turning weaker obviously will weaken as well the US dollar, and the dollar weakness might be the ongoing story. Euro up, pound higher, Australian dollar potentially higher, as well as the Japanese yen, which is and has been the talk of the markets fairly recently, focusing on the dollar against the Japanese yen here. A little short position up and running the market, looking set to weaken somehow. 160, it's the psychological area where the Bank of Japan said, hey, at those levels, we're going to focus. However, what they want to do, right? So they don't have a lot and enough firepower to strengthen their own currency, aging population, economic development. Whoa, we might debate, but definitely the debt burden extremely high in Japan, so it's just a big mix for quite a weak currency. That said, short term and based on the longer term charting pattern on the weekly, we see there is a strong resistance area, hard to be seen here, but we can see, yeah, now it's clear, a bit of a pin bar candlestick, quite tiny, but this would be a potential turnaround pattern causing the market to potentially weaken. So well, let's see next week whether there is going to be some sort of further strengthening momentum, potentially at least in regards to the Japanese yen. That's more about all about the market news this upcoming week. We still got producer prices, basically a preview producer prices here, similar levels at the moment. If they kind of remain stable, there's not too much input in regards to consumer prices. Producer prices falling with a delay might also call consumer prices falling with the extension obviously of some time down the road. We have the consumer sentiment, and the consumer sentiment at slightly lower levels in comparison to the previous reading. So there might be something also similar to purchasing manager indices here, that the confidence in the economy might actually kind of turn slightly down. Weaker support, weaker sentiment could also negatively weigh on the dollar. And as it looks like currently, the greenback having kind of quite a few construction sites, we might say, which could undermine the strength of the dollar. So the dollar obviously could be ready to weaken somehow further. Downside momentum here in this sentiment, it could be one of the cases at least we can focus on. Away from the dollar towards the other underlying assets here. So gold prices shooting up, big time upside momentum in gold. That looks quite positive. A big question still remains, is this resistance area going to last? Will the market break beyond this area, which would be only above those wicks, above the high points here? We are still in the early days of July. Could mean that early July slightly higher, mid of July the market falling. So downside potentially in gold could be the big question, but focusing on something kind of more interesting, that's silver. The silver market seemed to rock the show again. Silver up and running. This looks like a strong bull market is going to defend its momentum, causing upside motivation here, and silver looking quite positive here based on these charting patterns. If the resistance area can be broken, that is 3150 thereabout, upside motivation might continue. So motivation, positive sentiment here, and clear path, the dollar weakness helping silver prices to continue their way to the upside. Another commodity is oil. Oil prices are not only affected by the dollar, obviously, barges, supply, demand. There's a huge geopolitical tensions, seaways, freight situation and such, right? So there's a big conglomerate of impactful momentum impacting oil markets. However, oil was rising fairly recently. We saw within daily charts, within recent trading weeks, we might say, from a technical oversold, this is the relative strength index here, from an oversold area to an overbought area somehow. This could be one of the reasons the trend line is still in from last week, why oil might weaken initially. However, long-term impact in oil still extremely positive. The market's trend from this technical resistance area, whether it makes sense or not, but the market is still looking kind of quite positive here. Based on the monthly chart, we've seen this support area and the market breaking beyond that zone. Upside motivation, a clear breakout happening. So oil prices could potentially rise further. And again, dollar weakness would help the market to push back to higher levels. Last but not least, crypto markets, Bitcoin's sliding prices kind of still ongoing. Not too much of a positive impact. We can see that these markets are clearly back up and towards lower levels. Whether it's Bitcoin or we look at Ether, we see the same sliding price momentum. Ether might still stabilize at around these current levels. That's the 3,000 level, currently trading at 2,975 about. That's still within the vicinity of potential rising prices here. However, we are at the last state, the last resort, supportive spoken wise here. The market really needs to rise sharply off this zone, else falling prices could likely be the outcome here in this market environment. And well, Bitcoin had already extended the recent support area. Psychological 60,000 zone broken. This zone broken to the downside. Whether this is now enough reason to justify a downside motivation, but any kind of push to higher levels could meet this 60,000 level as a strong resistance area, right? Previously, psychological support causing markets to rise, now turning as a resistance and potentially being a strong resistance, causing market momentum to fall again. So the market looks kind of quite vulnerable for further losses, whether we also move on further down towards altcoins, Ripple, XRP's token, quite weak, Litecoin. They all are kind of in a negative market sentiment, and we see currently that there's not too much positivity being expected. The general trend in markets quite weak, and the crypto world looking set for downside motivation. That said, talking about risk sentiment in general, the S&P 500 was able to gear up some momentum last week. However, question remains, upside momentum going to continue? At the moment, the markets look quite strong. The S&P rising somewhat, the NASDAQ rising as well. However, if we're looking at underlying equities from that side, let me eye the market here and look at the price of NVIDIA. NVIDIA has not been rising much, right? So, and that's a strong impact in regards to those markets. So whether the NVIDIA price is going to rise somehow further might be the question. The AI mania, recent chatter on Bloomberg stating the same. Do we really need, and do we see those prices, those underlying companies pushing indices further to high levels, or do we see a rotation in markets, which might be the opposite side, causing potential profit taking with the election in the US brewing? By the way, Joe Biden obviously stating, hey, I'm the best to be the candidate for Democrats in the States, and he's obviously not going to make way. His TV interview, which I watched at least, he looked kind of a bit more personal, better than in the TV debate against Donald Trump. So that situation alone could cause some interesting motivation. But again, election years had usually in the past seen the less or the least returns in equities, and this could be something similar traders, investors might should watch out for this year. Happy trading, guys. Talk to you soon. Thanks for tuning in. Have a good one. Ciao, ciao.